So Akhil, you saw in 2012 this AIF piece is getting regulated by SEBI. Otherwise, people used to call it venture capital, private equity, whatnot. And 2015 was the time when you started preparing for AIFs. I am talking about CAT 3. Of course, CAT 1 and 2 is something that you've been doing as an organization for more than 1.5 decades, even before it got regulated. So can you talk to us and tell us more about because this is a question that I get from my investor more often, is which vehicle one should choose? Is it AIF which is better? Because we are witnessing huge amount of alpha coming in the AIFs, or the PMS or mutual fund, because you run all three.
So I would say that all platforms are offering their own advantages. I would believe that mutual funds clearly is one of the most efficient vehicle for any investor to invest across products, across asset classes. Very, very nice, very clean, very tax efficient kind of a structure. But mutual funds, because it's a mass retail product where you have investors who are putting as low as 100 rupee of SIP, when you have that kind of a large retail investor base, obviously regulators are extremely careful as to how the investor funds or the retail investor funds are getting managed in the most prudent way, ensuring that the risk is contained, volatility is limited, and one can get reasonable participation in the Indian stock markets, right? So I would say that mutual funds were and will be one of the best
mutual
vehicles.
Fund to sahi hai.
Mutual fund sahi hai. There is no doubt about that. Now, as India is growing, as India is progressing, as Indian economy is growing, we all know that in the last 15 years, a $1 trillion economy has now become $3.5 trillion economy. Per capita of $800 per capita now is $2,500. And we all know the story which is being talked about today, that by the end of decade, India should be a $6 trillion economy.
Yes.
So we will double our economy from 3 trillion today to 6 trillion by the end of the decade, which would mean that the per capita income would actually go up 3 times to $6,000.
Right.
Now, what per capita means is basically the total economy or the total GDP size divided by number of people is how much money is there per citizen in this country.
Right.
Now, as the per capita keeps going up, it leads to beyond a certain spend per capita, which is on your basic needs, your basic food, clothing, essentials. Anything you earn over that, which essentially would be $1,000. So over and above $1,000, incrementally whatever money people are making, that a large part of it would go into consumption, right?
Discretionary spend.
Discretionary, so people will try to upgrade their lifestyles, they'll have better homes, better cars, better two-wheelers, better food, better clothes, they will travel around. So that's the whole classic India story where, poor people going into becoming lower middle becoming middle becoming rich becoming richer, and that's how the whole consumer or the consumer discretionary story is playing out. But the other part, all of us and what we have learned from our elders is to save. Right? So India is one rare economy where the savings rate to GDP is 28%.
Right.
And at some points of time it has also been 35-36%.
True.
So a large part of individual income goes into savings. And which would mean that incrementally people income level will move up, consumption power will move up, and savings power will move up. Right. And in the process, in the last 15 years, Indian citizens have created a lot of wealth, right? Now, as people are getting richer, obviously they start to look, when it comes to savings, they start to look at products which are beyond conventional mutual funds. Their expectation is to have slightly differentiated portfolios, boutique portfolios, something which is tailor-made to their interest or their liking, which is where the opportunity of PMS and AIF comes inside. You gave some numbers, statistics on the assets under management for PMS and AIF. In the last 10 years, PMS AUM has grown 10 times literally, only the equity part, from 30,000 crores to 3 lakh crores. Right? It's been a 10x growth.
Right.
AIFs from 2012 to 2020, again 10 years, from nothing, only the listed side has grown to 70,000 crores. So certainly we are seeing that high net worth individuals, ultra high net worth family offices are looking at alternate products, PMS, AIF, identify managers who can give them those differentiated portfolios to ensure that one, in their overall portfolio they get a bit of a diversification, and also in hope that these products can give better, consistent, long-term alpha over a period of time. But I think we are just at the tipping point. This opportunity will be very, very large. If you see the 2020 Hurun study, what we see is that there are, as on 2020, so the numbers will be much higher last year.
Right.
There are about 700,000 Indians with a net worth of $1 million and more, 8 crores, right? So clearly when somebody has that kind of net worth, that kind of money, will look at diversification into niche portfolios, niche opportunities, and that's where we are seeing incrementally a lot of tailwinds for PMS and AIF, and that's where you see the growth.
So can I say that mutual fund to sahi, as you rightly said, and it will continue.
PMS bhi sahi
It's
hai,
not about
AIF bhi sahi hai.
Right. It's not about mutual fund versus PMS versus AIF.
See, if you allow me very briefly, I'll explain to you. All three platforms are basically funds, and they are trying to underlying buy into stocks.
Right.
So when you buy a mutual fund scheme, that scheme is also underlying creating a portfolio of stocks. When you buy a PMS, underlying is a portfolio of stocks. When you buy AIFs, again it is a portfolio of stocks.
Right.
How the selection and the allocation is being done is what makes each of these vehicles different from each other.
Right.